What's up, investors? Ken here from Dyslexic Investor, and we're going to be looking at Uber. This is the ride-sharing, ride-hailing, food delivery, scooter, mass commuting, hopefully self-driving. Now they do freight and all other kinds of stuff. It's a company that everyone's probably heard about. Between Uber, Lyft, these are like the two bigger ride-sharing, hailing companies that you'll see here in the U.S. So what we're going to be discussing today is looking at the technicals, the fundamentals, what the analysts think, and what the crystal ball might be telling us. All right, so first and foremost, we're going to be going down the route of looking at the stock itself. So this is a daily chart of 1 year, or the stock was debuted on the beginning of May, so it's only been since May. The stock's been active. You can kind of see here, it hit the high of 47.08. That was in June, May, yep. And then it has had 3 earnings, 1, 2, 3. The most recent one just the beginning of November on the 4th, which didn't do too hot. Another casualty here, you can kind of see here, it kind of traded a little sideways here, and then the run into this earnings kind of came crashing down. And ever since that last 2 earnings ago, it's kind of been just on the downtrend of not being able to break out of this completely downtrend here. You can kind of see here on these lines here. This is really just rough. So this think we're just going to be trading down until we can break above that line. So let's draw a little bit more of a permanent line here. We're going to go here. Draw line. We're going to go like, what color should we make this? We're going to make this we're going to make this a nice green line, and we're going to make it fairly thick because it's going to take a lot to push through. So that's just like a theoretically green line that this kind of has to break out, and these moving averages need to stop pointing down and kind of level off. A lot of people think that this is a good point for it to start leveling off, just because I think it came public, what was it, tried to come out at 45 or something like that. It ran like, yeah, it came up public around 45, and then it just crashed from there. Came down to the 36, and then traded up the next couple of days at 45, and it really has just been trading sideways and then down from there. So technically speaking, I would let this kind of even out a little bit, get those moving averages to kind of straighten up, and then potentially try to kick this green line higher. And this is just a simple trend line here from the top of here. That kind of barely tapped it here. So this is, again, just drawing these random lines that mean nothing. It's just a good indicator to kind of show some breakthrough. All right, so we're going to be looking at CNN Business and what they're predicting, what the analysts are saying, and so forth. So the analysts are predicting a medium return of $45. This is in the next 12 months. The low is 26, and guess what? We are at 26.79 right now. So they're saying this is the bottom. In my case, they're saying it's most likely it could trade lower, but they say within 12 months it's gonna be in around. Again, no one has a crystal ball in the financial markets. It's just a key little indicator. Then they're saying the potential high is at $64. So that's 138% where we're at right now. This, what did they say? 60. Wow, that's a lot. Okay, $64. So that's not even on my chart here. We're gonna zoom. Whew, $64 is right up here. Yikes. Okay. We're just gonna do a quick little line. Wow, that's a lot of price. But let's go ahead and create a line. We're gonna draw. We're gonna call this. Let's do that. We're gonna call this the CNN. Oh, CNN. 12-month high. Boop. for, we're just gonna call it 2020. Nope, not 2002. My gosh, when I say it out loud, it's gonna come through. And we're gonna make this a really hot pink, and we're gonna make that thick as well. And I should probably show the text here. I'm gonna show on the left. Bada bing, bada bang. All right, so we're not gonna see that for a while, right, boys? Anywho, so that is, if that hits that, that's gonna be fantastic, I guess, for the shareholders. And there's a lot of things that the former Travis Kalanick said that he sold like $700 million of shares, but again, he has like $2 billion of it. Actually, this is the wrong article. Let's go. I like my boys at IBD. So even though they're actually somewhat optimistic, and a lot of other banks kind of gotten somewhat behind it in the last week or so, of saying like, wow, this is just too low for it to go any lower, because the stock has just been down. It's like basically cut by 40% already since its IPO breakout price. It's just the lack of just follow through, and I feel like with Lyft kind of coming. So if you look at Lyft, so LYFT, there we go, bam. It's kind of doing what we want Uber to do. And since it kind of ran up, came crashing down. Guess what? It has not broken past its IPO price here. So we can draw a trend line here as well. We want see, it's pretty far off as well on this guy. We're gonna make this. We like to make that green. We'll make that thick. So that is that trend line that they had to break across. So they had their earnings. It really didn't go down that much further. So we're still losing money. All these ride-sharing companies are losing money on each ride. Like, how much is Uber losing per ride? Let's look this up. Uber's loss per ride. Oop. Alright, I'm back after doing such really hard looking around on Google. I found out they lose about 58 cents to 64 cents between 2018 and 2019's average rides. So again, some rides could be making $4 or $5, but then there could be a ride that they lost $10 on. And this is, again, a complete average. So take that as with a grain of salt. It's not the best business model, and a lot of people are telling Uber to get out of the Uber Eats business. So getting out of Uber Eats, is basically their delivery service, where instead of the driver taking you from point A to point B, they take your McDonald's Big Mac from the store to your house, your apartment, and so forth like that. Let's see here. Okay, I found this really good article here. So they're saying that, so there's a lot of businesses that pick up food from point A to point B for customers, take them to their locations, to their office, or just meet them at the park. The reason a lot of people are not a huge fan of this is the fact that it's a losing business. Like, you're paying a really high cost, and supply and the demand is there. The supply is kind of sitting on the wayside, and you need like these middle people, aka the folks on the bikes, the cars, the scooters, or whatever, to deliver the food. And that's a huge cutoff on making sure that middleman or middle woman gets paid at a reasonable rate. And a lot of factors it comes down to is they're making peanuts. Literally, they're not making anything. A lot of the times they're making, on average, $8 to $12 an hour, and they can do that by doing something else, rather than running around wasting gas and things like that. And so the thing is too is if you listen to the last Domino's earnings call, the CEO suggested and actually said straight out that these companies will probably fail soon due to the fact that their costs are so subsidized by a lot of, Grubhub is a public company, Postmates is not, neither is DoorDash, but Uber Eats is under the Uber umbrella, which is public, we're just talking about, and then Grubhub. It's just going to be, I don't think they're going to make it, because it's just there's again, a lot of people say the competition's great, but there's too many selections for people to have their food delivered. Again, time will tell. We'll see what happens. But for trading purposes and investing, I would have a very tight leash on this guy here, especially on Uber. I would kind of keep it at, if you're buying it on Monday or this following week, if it breaks below this or slightly below this, I never do the exact price, maybe do it like $24.58. I would get out if I bought it at like 26. So like, basically, I would keep it tighter, honestly, if it broke at 25 or something like that, because I don't want this just crashing down, because it could easily happen. There could be negative press coming out saying, oh, Uber driver got angry at the company because he was not called an employee, or whatever benefits, whatever article that I just read a couple days ago, and how each individual gets they just need to get better treatment and things like that. And who knows, 20 years from now, Uber's stock might be flying high, and it's going to be the next Amazon due to the fact of robots driving everywhere, being that the taxi company of the future. Again, guys, thank you so much for watching. This is Ken from the Dyslexic Investor. Catch you guys on the flip side. Peace.